All right, what's up, guys? Good morning and happy last day of August, right? 31st? Yeah, last day of the month. We have made it through another one. All right, guys, quick look here at the futures, and then we'll talk about a couple of the day trade ideas and then a couple of swing trade ideas. So the futures, S&P's up a little bit. Right? We're down about a third. And of course, we are under the 50 SMA. So not the prettiest looking chart. The QQQ futures are up about, clean this up, 0.6%. And of course, under the daily 50. And we'll look at the Russell real quick. The Russell is up a little bit. So for today, guys, a couple of potential ideas for a day trade. Right? So for one, it is the last day of the month. Doesn't mean we have to get a bounce. You do tend to see a little bit of a bounce, typically towards the end of the month. So as far as looking for a setup to kind of put behind that idea, a couple of things here. One, though I do think for now we're probably going to head back towards those lows, we're a little bit extended to the downside. So on a daily chart, you got your S&Ps, your Qs down here at -2 ATR. But then even on an hourly chart, we're oversold on an intraday basis as well. We're down here at -2 on the hourly chart. So here's what I'm thinking. Heading into the open, on the big three indicator, we have our sell signals on the 30-minute and the 15-minute. What I would like to target would be a potential move, ideally through, but at a minimum, a move to about $400 into today's close. So as far as putting an idea to work, what I would look for here at the open is that the S&Ps get back above the 15-minute 21 EMA, and we cancel out that 15-minute sell signal. So for those of you with the big three indicator, we're not looking for things to go bullish necessarily. We're looking for signs of exhaustion. If the market's going to continue to trade lower, when we're down here at -2 ATR, basically the bears need a full gas tank. It's pretty much like when we get these big rallies, which are always fun to trade, right? But up here at 2 ATR, if you start to lose all your buy signals, you start to get signs of exhaustion, you're typically going to get your dip back towards that mean. So with the current structure looking a bit bearish here, if we start to lose the lower time frame sell signals, all kind of points towards a bit of a bounce. So I think at a minimum, get back above the 15-minute 21 EMA. Let's go from bearish to neutral. So red to yellow on the big three label. And then based on the internals, if the VIX is coming in a little bit, if the dollar is pulling back a little bit, if your ticks are strong, then I think what could offer a good risk reward to be something like today's expiration. Something up there at $4,000. And a couple different ways you can skin the cat. You could, which I'm kind of thinking is maybe a 39.95, 39.85 put credit spread. Because then you'll take home some premium even if we just close at 4K. And of course, if the market rallies today, the premium will come in a little bit quicker. So let's see, 39.95, 39.85. So $10 wide put credit spread for today. It's $3.50 to $4 a credit. It's a pretty solid risk reward. And obviously, I don't think you have to sit around and eat the max loss. So there's one idea. You could do a butterfly. If your thinking is a bit more, we're going to pin at 400. Or you could do something like an unbalanced fly. If you're really frisky, you could even buy some cheap out the money calls. To me, the idea of trying to do the short puts under 4K, I think that makes a lot of sense. Then if we close at 4,000, you'll collect your max profit. And what I would do, guys, is basically set an exit order and just try to take home 60, 70% of the max profit. But if we close at 4K, that expires at a max profit. if we close at 410, 4020, 4050, there's no upside risk. So if you instead do the butterfly at 4K, depending on how wide you go, if the S&Ps are a little bit too strong, that trade could go against you. So there's one day trade idea. And if I take that trade today, I would start to feel like I'm on the wrong side of things if the 15-minute chart basically gave back that progress. So I'll take the trade if we can get a 15-minute close above the 21, if we can get rid of the red labels and the red arrows, go from bearish to neutral, then I'll take that trade. But if at any point throughout the afternoon we are closing back under the 15-minute 21, the ticks are getting a bit bearish, the VIX starts to pop, we get another 15-minute sell signal, then I would cut the trade off. So potential day trade idea. Now for you swingers in here, I think for now it's pretty straightforward. Looking to short the dip. Short the dip. That's never a good game plan. Looking to short the rally. And it's pretty simple, guys. If we look at the inverse chart, minus SPY, this all kind of sets up my bullish trade. Back above that 21, your 30-minute, 15-minute charts are bullish. If we can get a pullback and the pullback holds support, probably would look to buy some calls. So when I look at the inverse charts right now, they kind of look like charts I'd want to buy the dip in. So the inverse chart of the Qs here, positive histogram back above the mean, bullish big three on the 30-minute, 15-minute. That could dip a little bit, and we hold above that 21. Probably buy some calls. Inverse chart of Google. I'm not going to chase it up here, but man, if I can pull back, this looks really good for higher prices. Positive histogram, a bunch of buy signals. So if you would buy the dip on the inverse chart, based on whatever your criteria may be, basically that means you would look to short the rally with the current chart under the 21 EMA. And we got some sell signals here. So I'm not going to give you guys an exact price where it's like, hey, I can't short until we hit this level. It really is more so the neighborhood. So I think the most important thing if you're going to look for as you're planning out a swing trade, one of the first things I think you should identify is where am I wrong? So if the current thinking is we're going to continue to trend lower, I think in the short term I'm wrong. If the S&Ps and the Qs start to close back above the weekly 21 EMA, I don't think that necessarily takes us back towards the previous highs. But I do think back above the weekly 21, if anything, the bulls can put a stop to the bleeding. So that's where I'm wrong. Right? That's my line in the sand. So always figure that out. And then where's your target? I think for a swing trade, October expiration puts, we could look for a move back down towards the recent low. So here's where we're wrong. Or I'll speak for myself. Here's where I probably no longer want to hold those out the money puts. And then, drop my pen. And then there's a target to the downside. So figure those two things out. And then in terms of, okay, where do I take the trade? Pretty simple. You're going to get your best risk reward the closer you can buy those puts to your line in the sand. So imagine if I buy puts on the S&Ps at 375. It's like, what are we doing here? There's a little bit of potential reward down to my target. But if I get short down here, I can't use 410 as my exit. A little bit of reward, way too much risk. So really, to get on the right side of the risk-reward spectrum, it's not so much an exact price, just more so an understanding. If I could short the S&Ps at 409, and my exit is a close back above that daily 21, that's not really too much risk. Especially in comparison to, well, if the trade works out, you're taking profits back here at the lows. So don't be too hell-bent on trying to get, an exact level. Like I have to short the market right at that 21 EMA. Figure out your line in the sand. Figure out your target to the downside if you're doing a bearish trade. And then just the understanding, if I can buy those puts up here, if the trade doesn't work, it's kind of a paper cut. And if the trade does work, well, that's the kind of thing that turns into, one of your bigger trades of the year. So I think for your S&Ps and your QQQ, that's the neighborhood of where I'd like to buy those October expiration puts. And I think we can go a little bit out the money. So the closer to the daily 21 EMA we get, the better the entry. And I really think, guys, if we can just focus on shorting the S&P or the QQQ, it covers all the bases. So NVIDIA, for example, just understand where we're at in the market right now. It's no longer about, okay, let's look for a setup in NVIDIA. How's Google look? How's Amazon look? This is all just coming down to the market. So there's a very good chance, whatever the pattern is here in the S&P for the next 3 weeks, NVIDIA, Google, Amazon, Tesla, AMD, Apple, Facebook, Netflix, very, very likely they're all going to have almost exactly the same pattern. Meaning if you short NVIDIA, what I'm trying to say is you're really just shorting the market. Because there's nothing special about NVIDIA right now. It looks like everything else. The semiconductors look like the transports. The transports look like XLP. XLP looks like XLK. They all look like the S&P 500. I don't think we need to find ourselves in a position where we have puts on healthcare. And we've got puts in the industrial sector. And then we're selling call credit spreads on the semis. We're doing put debit spreads on AMD. You can do all of those trades. If the S&P 500 rolls over, every one of those trades is going to work. If the market rallies, those trades probably eat shit. So I think to shorten the S&Ps and the Qs, putting your risk there, it's a heck of a lot easier. If the market goes against you, now you're only trying to manage one position versus 4 or 5. And at the end of the day, I think it's the same trade. So October expiration, out the money puts, if we can get a little bit closer towards that 21 EMA. And if you guys want to short the individual stocks, I'm not saying you can't do that. What I'm trying to say is it doesn't make too much sense to have QQQ, SMH, NVIDIA, Google puts. You're taking the same trade in 4 places. But if your preference is to short the stock, I think you work the same game plan here with AMD. So on the inverse chart of AMD, daily squeeze as of yesterday just fires to the upside. So I think we've got to think this has got more gas in the tank. We've got bullish big 3 on the 1 hour and the 30-minute. Looking at the labels up here. Okay, I'd like to buy some calls if it can dip a little closer to that 21. All that means on the current chart is just the opposite. Daily squeeze as of yesterday just fired short. So if we can catch a little bit of a bounce, I think you get continuation. So the way that I would approach shorting the S&Ps or the Qs, that's how I'd approach shorting anything right now. So there's one swing trade idea. Now that's what I think most of the shorts are going to look like. We're under the 21. There's daily squeezes firing short. We're just trying to short the bounce. From another perspective, there's some things out there like Snowflake, for example. And here's the thought process. If the market between now and my birthday, right, mid-October, if between now and my birthday, if that's the market's birthday gift to me, is a move back down towards the lows, I think as a general statement, almost everything makes a similar move. So when you find a chart like now, if you find a chart right now like Snowflake, It holds up well. It's pretty extended. But I don't think Snowflake is going to buck the trend. So if come October the market's back down at a brand new low, does that mean Snowflake has to be back down here at $100? No. Could you probably catch a nice double, maybe a nice 2x return on your puts if you could just catch it down to the 50? I certainly think so. So it's a different trade where the structure of this actually looks pretty good, but more so the thinking is the S&Ps die. Everything generally dies with it. So Snowflake can kind of fight the good fight, but I think only for so long. So again, in terms of risk versus reward, you buy some October expiration puts, you put your exit on a close above, say, 200. I mean, even if you can catch it down to the 21, it's a nice paycheck. You catch it down to the 50, it's a nicer paycheck. You catch a move back down towards the lows, of course, probably one of your bigger trades of the year. So definitely keep an eye out for charts like that. Jace, if you're in here, Foot Locker, I think is a great example of this. I highly doubt Foot Locker is going to sell enough sneakers to buck the trend in the market. If you got your Qs and your S&Ps making brand new lows. But if you can even catch it from up here at +2 to the 21, that's a nice return. Down to the 50, that's a really big return. And then, of course, if this goes back to 23, isn't that ironic? Foot Locker at 23. Obviously those puts are exploding. So most of what I'm looking for is going to be a bit more based on, hey, this structure looks really bearish, so let's short the bounce. But bigger picture thinking, the S&P's hit 350 for conversation's sake. I think basically everything's heading back towards their June, July lows. So there's a few short ideas, guys. Now, as far as the upside, a lot of what's been looking good is energy and natural gas. My advice is be a bit patient as far as getting long there. So energy this morning, right? So look at your chart of SMH. Look at your chart of SPY, QQQ, XLK. Everything is really broken structure in a big fashion. Energy, one of the few spots to still hold up pretty good. But under that daily 21 EMA, I think things could get a little bit suspect here. So I wouldn't approach energy with this assumption that it just has to continue to rally. I think even energy could potentially bite the dust here if things really got rough for the market. So with patience, guys, and if you're in the mastery, you know the trade we're looking for. Get back towards that 21 EMA. We have to hold support there. And then we need a fresh round of buy signals on the big 3 indicator. So we would want to see support, and then your 5-minute, 15-minute, 30-minute labels, they start to go from yellow to green. That typically triggers, the push we're looking for. So be patient with that. Oxy this morning, I'd like to buy that above the 21. Exxon Mobil, I'd like to buy that above the 21. But just be patient here. Don't have the assumption because it's been acting well that it has to continue to act well. Make your trade decisions based on structure and signals. So the only way I'm getting long energy is if it perfectly fits the criteria. So we're still keeping a close eye on that. And then for natty gas here, I think the next move here in the short term for UNG probably comes down to the 4-hour squeeze and whether or not that fire is long or short. So the 4-hour squeeze firing short, that could potentially take you back towards your 50, down around $27. 4-hour squeeze fires to the upside, that could potentially take you through these highs at 34.50. And then, of course, there's your daily 21. So here's the subject in question. 4-hour squeeze. It prints the buy signal for now, but then take note it's a high compression squeeze. These tend to have a knack to want to fire counter trend. And a counter trend would be firing to the downside at this point. So we'll see what's up there with the 4-hour squeeze, but I would imagine that probably sends you back towards your highs or takes you down towards potentially the 50. So for a bullish trade, of course, you'd want to see that 4-hour squeeze fire to Z upside. Let me see, natural gas futures. Yeah, here's the futures for natural gas. We hold the daily 21. This is a problem, though. Yeah, this is a problem. If you're bullish on natural gas, rejection at your hourly 50, hourly squeeze, hourly sell signal. If anything can take you back under your daily 21, it would be that. Hourly squeeze, rejection at resistance, plus a sell signal. So actually, what's really bullish here for natural gas, if you have the indicator, what would be really bullish here is, it's the last day of the month. So there could be some funny business. But what I would actually think is really bullish is if they could kind of rope in some shorts and then cancel out this hourly sell signal. Like basically get this on the verge of a breakdown, rope in the shorts, but then if we're trending back above the hourly 21, could be a bit of a trap. So I think that's the question for UNG. End of month shenanigans, a little bit of a bear trap, and they rip it, or does this start to break? So be I was gonna say be careful. Be patient with the whole energy/commodities idea. Like wheat's got a good chart. It's got an okay chart, I should say. Here's corn. One's actually pretty good. But I think a big part of trading is really starting your game planning with the overall market. And then from that, you're taking context as to what's going to be the biggest plate of opportunity. And I think for now, it's a safe bet for the swing traders in here. The biggest plate of opportunity, until proven wrong, is going to be shorting the bounces and the S&Ps and the Qs. So to an extent, if that's a bigger plate of opportunity, you don't actually have to be overly concerned with trying to potentially get long the only good-looking thing out there in energy. The easier trade might be hit the bounce in the market, short it, rinse and repeat. But that is what I got for you guys. So if you got any questions, any charts you want to take a look at, throw it over here in the chat, and I'll take a quick look before I jump into the options room. Take those good people through the open. Actually, before I jump in the chat here, Amelia, I'm not sure if Mimi is here. But before I let you guys go, I will grab the link to the Mastery trial. So right now we got the 30-day trial going for $7. So I would invite you guys to come on over. Being that today is the last day of the month, and here's a quick recap for August. So here's the sheet. So here's the trades we did in the Mastery in August. So let's see. 7 trades. 2 losers. Hold on, guys. I got an echo going. There we go. Okay, 7 trades, 2 losers in NVIDIA and Snapchat. So on NVIDIA, we lost about 57%, which frankly is a little bit more than I'm looking for on the losing trades. I think part of that was we had out the money calls. So we lost about 60% on NVIDIA. We lost 30% on Snapchat, which is a little bit more like it. We had a tiny profit on a Tesla put credit spread. So call that lunch money. Then we had an 80% return on some shop calls, 116% return on a Tesla call debit spread, 50% on ExxonMobil calls, and 50% on Freeport. So with 5% risk per trade, that's good for an 11% net return for the month. And I highly doubt we're going to get an open and closed trade in the books today. So probably a wrap on the month of August. And I got a feeling September will be better, but we will see. Yeah, guys, hang tight. Let me go grab that for you. Simplertrading.com. Memberships, mastery. Yeah, and in the mastery, I am live on Thursdays and Fridays. But then, of course, I'm pushing out trade alerts and updates and things of that nature. All right, there you go. Put that in the chat. There you go, Miss Janice. All right, guys, a couple charts here, and then we'll call it a morning. Well, we won't call it a morning, but I got to move on to the next room. So for Microsoft here, this is just going to move with the S&P or the QQQ. So I think from a bigger picture perspective, this obviously all gets pretty bearish here. We're back under the 21 EMA. And always take note, guys, of the direction of that moving average. So notice how that moving average starts to curl back towards the downside. That alone is one clue. Path of least resistance kind of transitioning back towards being to the downside. And then, of course, we're trading under the 21. We're under the 50. We have 1 hour, 30-minute, 15-minute sell signals. So it certainly looks like something that's poised for lower prices. But I would be careful shorting it here. We're at 262. Never mind the daily 21, the hourly 21's up here at 267. So the risk right now, of course, is you can buy these puts. Microsoft could rally 263 to 267. This could rally 1.5%, 2% against you. Nothing has changed about that overall bearish structure. That could rally up to the 50 at 270. Now you're taking a 2.5% pop on the chin. This still all looks like a good short all the way up to that daily 21. That's at 276. So you could buy those puts today. Microsoft could rally 5% against you. Still looks pretty bearish. But the major thing here is Microsoft's going to move with the S&P and the QQQ. So if the next move here for the S&Ps to move back up towards that daily 21 EMA, very, very likely Microsoft does something very similar. Now, even though we're oversold, if the S&Ps roll over from here, well, even though Microsoft's very oversold, it's probably going to roll over as well. So again, I don't think anything wrong with doing the trade in the individual stock, but more so just the realization we are definitely in a market right now where we want to anchor all our trade decisions to the S&P or the QQQ. Where this chart and where this chart goes, so goes Amazon, Apple, Google, Nvidia, Microsoft. So in other words, you start your thought process here, and then as long as things check out here, whether you're thinking long or short, then you go execute that on something like a Microsoft. But all right, my friends, as always, I appreciate it. Look at that. We got a good crowd, 100 folks in here today. Big respect to all 100 of you. Showing up a little bit early, getting ready for the open. So thank you, guys. I hope you have a great day. Chandler should be with you on Friday. And then for those of you in the options room, I will see you all in a couple of minutes. For those of you in the mastery, I will be live tomorrow at 10:30 Central, and same thing on Friday. But all right, my friends, be good today, be safe, and we'll talk soon.